So are there any specific tax implications that retirees may need to consider when they're planning retirement and just their withdrawal strategies through retirement?
Yeah, there are a couple of things that can come up as a surprise, or certainly are important to measure and prepare yourself for. I think one thing in particular, paying taxes means you're making money. So it's not the worst thing to have to pay taxes if you're taking more money out to live your lifestyle and you owe tax. So number one is, I think it's very important just to be prepared for what taxes you will owe. And if you can get them paid ahead of time by, withholding along the way, that's the perfect scenario. But the real things that people need to watch out for are, one is the more money that you make in retirement will make more of your Social Security taxable. And so there are, if we can reduce the total amount of taxable income from other sources that you have, and then you're also getting Social Security, we may be able to make more of Social Security tax-free. On the other hand, a lot of times you are paying your taxes and you kind of have an expectation of how much Social Security is going to be taxed. And you have a year where you make an extra withdrawal. You buy a car, you take a special trip, more income than usual that year. And you're thinking, oh, I know I'm going to get taxed on my extra IRA withdrawal. But you also might get taxed more on Social Security because you had more total income. So that's one thing to just be aware of and stay on top of. And obviously, if we can avoid more income in a given year to keep that from happening. The other thing is the more that you make, the more you're going to pay for your Medicare Premium Part B. And so that's another element there where that's a pretty expensive premium to have to be paying those additional premiums. And the IRS will look back, or Medicare will look back at your last 2 years of tax returns. So once you're kind of stuck in that higher premium, it's going to take a couple of years for that to run off. So you want to be able to identify if you're going to have higher premiums, because you might accept the income taxes that you're going to pay and end up paying a higher premium for your health insurance, which we were talking about earlier, than you otherwise would have to. Those are just a couple examples where once you start to go a little bit higher, it causes other things to go a little bit higher too that you weren't even paying before. So we always want to just drop those in and kind of go through those what if scenarios if we're changing the total amount of income. If you like what you heard on this video and you'd like to have a personal conversation more about your situation, check us out at gootfinancial.com and sign up for a conversation, and we're happy to see how we can help.